Roberts. I'm a member of the Communications and CPD committees at the Insurance Institute of Manchester. Please note that this session is recorded and will be shared on the Insurance Institute Manchester website and our YouTube channel after the session. As a reminder, a survey will be sent following today's session, so please do take 5 minutes to complete the survey, as your feedback really is important to us at the Institute, and it will help the CPD committees form future sessions from your feedback. So welcome to today's session. It's the insurance landscape under the Building Safety Act 2022. We're delighted to welcome Glyn Brooks-Humphreys, the Director of Commercial Property Operations at Woodgate & Clark, who'll be taking us through today's session. I'll hand over to Glyn.
Thank you very much, Nia. As Nia said, my name is Glyn Brooks-Humphrey and I'm the Director of Commercial Property Operations at Woodgate & Clark Loss Adjusters and also a Chartered Loss Adjuster. I've been in the claims handling game now for over 30 years, and like many, I've gone from claims handler to a loss adjuster external role, and then from there into to operational management. As you can see from the photo, that was taken a few years ago. So you can see me on the screen. I'm not catfishing anybody. That's just a little bit of an old photograph. So right, we'll get cracking. So right, what are we gonna cover in today's webinar? So the purpose of today's webinar is just to provide an overview of the implications of the Building Safety Act 2022 with specific relevance to the insurance and claims market. So this is coming from a loss adjusting perspective. I'm not a surveyor. This isn't a highly technical buildings webinar, but it is just a webinar to point out some of the main sort of implications that the Act will have on the claims handling and the claims process. So these are the things we'll look at. First being a shift in the burden of proof relating to compliance with building standards and regulations, the requirement for a golden thread, which is the terminology used in the Act, of information to record the life cycle of a building, discussion points or decision points rather on proposed works in or on high risk buildings, and mandatory occurrence reporting, which is a new thing that's been introduced as part of the Act, should issues or risks be identified. So it's been nearly 8.5 years since the Grenfell Tower disaster, which prompted an independent review of building regulations and fire safety, which ultimately resulted in the Building Safety Act, BSA 2022. As architects, developers and construction companies navigate the new legal landscape, the implications for the insurance claims sector should not be underestimated. We need to prepare for the possibility of lengthy approvals process for repair works on high risk buildings, or HRBs, and higher associated claim costs across multiple insurance sectors. So this is what we'll look at. We'll look at the background to the Act, buildings that fall within the scope of the Act, new regulatory bodies and responsibilities that have arisen as a result of the Act, the new systems and compliance processes that have been introduced, insurance implications, and we'll have a quick look at a case study, some key takeaways for insurers, and then we'll come to our conclusions. And I think the webinar should take no longer than half an hour, so I won't keep you all too long. So the background to the Act, or the Building Safety Act, was the devastating fire at Grenfell, as we mentioned earlier, in West London, which happened in June 2017, and the tragedy claimed 72 lives, including 37 disabled people and 17 children. A really horrific event, and it exposed catastrophic failings in building safety, from combustible cladding and poor compartmentation to inadequate evacuation strategies. For the public, Grenfell became a symbol of regulatory failure, and for policymakers, it was a call to completely rethink building safety oversight. The scale of the loss highlighted the risks of poor building standards, not just in terms of property damage, but in liability exposure, claims handling complexity, and reputational risk for insurers. So in response to the tragedy, the government commissioned Dame Judith Hackett to conduct an independent review of building regulations and fire safety. Her Building a Safer Future report, published in 2018, called out a culture of systemic failure, where cost-cutting and compliance by box ticking took precedence over genuine risk management. Hackett recommended a stronger regulatory regime with accountability baked into every stage of a building's life cycle. Hackett's recommendations foreshadowed the shift in burden of proof we see today, with insurers needing to assess not only physical risk, but also the competence and compliance of those involved in design, construction, and maintenance of buildings. So there is a focus on high-rise residential buildings, not surprisingly, as a result of Grenfell. But the review and subsequent legislation initially concentrated on those types of properties, high-rise residential blocks, where the risk of fire spread, evacuation, and structural failure are all amplified. However, while high-risk buildings remain the central concern, the principles of the Act, accountability, competence, and transparency, do extend beyond just tall buildings. However, insurers covering high-risk buildings face higher claims costs, longer reinstatement times, and greater scrutiny from regulators. Yet the broader property insurance market is also touched, since the Act introduces systematic obligations that apply to all building works that fall under building regulations. So the Building and Safety Act became law in April 2022. It received royal assent, and it represents one of the most significant reforms of building and fire safety in nearly 4 decades. The Act not only creates new regulatory bodies, but also reshapes the responsibilities of developers, owners, and insurers. Since 2022, insurers have had to adapt underwriting practices, claims handling protocols, and professional indemnity coverage in light of these new legal obligations. And it's increased due diligence demands and introduced new variables into risk assessment. So one of the most crucial or critical features of the Act is that compliance is not limited to new developments. Substantial repair, refurbishment, and remedial works, especially those involving cladding replacement or fire safety upgrades, also trigger its requirements. And this dramatically extends the Act's reach, ensuring that legacy buildings with historic safety defects cannot escape scrutiny. What doesn't help is that the Act does not define substantial repair. So each case must be considered on its merits and potentially involve seeking advice from experts to determine whether the works in question require submission to the BSR or Building Safety Regulator. The Act also makes building owners and landlords responsible for the cost of rectifying any historic defects if the developers cannot be held accountable, which does at least protect leaseholders to some extent. However, leaseholders are not fully protected from ongoing safety management costs or the cost of future non-historical remedial works. For insurers, this means an increase in more complex, higher value claims, and repair projects, now they're more tightly regulated, often require lengthy approval processes at Gateway 2 and Gateway 3, which we'll come on to. This leads to extended business interruption claims, increased alternative accommodation costs, and ultimately higher indemnity outlays. So the scope of the Act, although Grenfell and the Hackett Review focused on high-rise blocks, the Building Safety Act applies to all buildings in England that are subject to building regulations. However, where it becomes especially stringent is with higher risk buildings, and those are defined as at least 18 metres tall or 7 stories in height and containing at least 2 residential units, which are defined as a dwelling or unit of living accommodation. So it's quite a wide definition and covers a lot of properties. High-risk buildings also includes hospitals and care homes, but only in relation to the initial construction phase of those types of buildings. They are not included once occupied, as they fall under separate legislation. Hotels, unless they are serviced apartment type hotels or have mixed use occupation, are fully excluded, along with secure institutions like prisons and anything relating to military housing or property. All high-risk buildings must be formally registered with the Building Safety Regulator, including a named person or organisation responsible for maintaining their safety before they can be occupied. In August 2025, there were approximately 12,500 such buildings existing in England. It's worthy of note at this point that currently the Act does not fully apply in Wales, Scotland and Northern Ireland, but the governments of those territories are all committed to improving building safety, with Wales in particular expected to introduce an even more stringent Act in the near future. The wide scope of the Act means insurers cannot treat it as a niche concern limited to tower blocks. Even mid-sized residential developments, hospitals and care facilities can come under its scrutiny. bringing with them more stringent compliance obligations and therefore more complex claims handling and potentially higher claims costs. So the Act introduced new regulatory bodies, and 3 of these, and these were brought in to tighten oversight. So the first is the Building Safety Regulator, or BSR, and this is housed within the Health and Safety Executive, and this is the key enforcement body overseeing standards and safety across all buildings, but with a particular mandate for high-risk buildings. It also introduced the National Regulator for Construction Products, and this body ensures that materials used in construction meet proper safety standards, and this is in direct response to the cladding failures highlighted by Grenfell, but it does apply to all building materials, not just external cladding. And finally, the new Homes Ombudsman was introduced, and this provides redress for owners of new build homes, ensuring that complaints are fairly handled and quality standards are enforced under the new Homes Quality Code. These bodies create multiple potential new touch points in the claims and construction process, and insurers will increasingly find themselves working with or waiting on regulatory approval, which will undoubtedly extend claim life cycles. At the same time, the construction product regulator may fuel more defect-related claims, while the new Home Ombudsman increases consumer leverage against developers and therefore potentially insurers as well. So the Act imposes clearer and heavier responsibilities on those who design, build and manage buildings. So as you can see, the Act really does get right into the whole process of building and maintaining new properties. So firstly, we have the introduction of an accountable person or persons. These are the named organisations or individuals legally responsible for occupied high-risk buildings. They must register the building with the BSR, maintain a detailed safety case report, operate resident engagement strategies, and run mandatory reporting systems for safety concerns. The safety case report is a document that summarises the owner's high-risk building safety case. It identifies the building's major fire and structural hazards, and it shows how they are managing the risks as far as they can. These will be required to be prepared by the accountable person and will be called by the Building Safety Regulator every 5 years, starting in 2024. So that's a big change to where we were at previously. Building owners, landlords and developers are all legally required to pay for the remediation of historical safety defects in high-risk buildings. And in the case of owners or landlords, they are not allowed to pass these on to leaseholders through increased ground rent or service charges. From 2026, they may also be subject to a building safety levy on new residential projects. The final one is duty holders, and these include building designers and contractors who must now demonstrate competence and manage building safety risks throughout the design and construction process. From an insurance perspective, these new responsibilities increase liability exposure throughout the chain, all the way from developers to consultants. And insurers, particularly in the professional indemnity market, must scrutinise the competency of compliance and compliance of those seeking cover, as non-compliance can lead to costly claims. So the Act also introduced a number of new systems and to make basically the responsibilities of the newly created bodies operational. So building control is now a regulated profession, and inspectors must meet competency standards with oversight by the Building Safety Regulator. Somewhat amazingly, considering what an important job this wasn't previously a requirement for that role. Competence requirements, both individual and organisational. Anybody involved in any stage of building design, construction or management must demonstrate capability in handling safety risks. And then finally, we have gateways 1 to 3, which are the 3 mandatory approval decision points which come before planning permission will be granted, before construction or repair is allowed to begin, and before a building can finally be occupied. So Gateway 1 relates to the building planning phase, Gateway 2 relates to the design and construction of high-risk buildings, and Gateway 3 is a hard stop to occupation without final sign-off from the Building Safety Regulator. Gateway 2 in particular is a crucial hold point and detailed design approval checkpoint for higher risk buildings that requires building safety regulator approval before any construction work can begin. Developers must submit comprehensive documentation demonstrating the design's compliance with building regulations, including fire safety and structural integrity. This includes competency statements, detailed plans, and plans for controlling and managing changes during the construction process. It replaces the previous deposit of plan stage and serves as a stop-go point to any works commencing on the building. The golden thread is a secure digital record of building information maintained and updated throughout the entire life cycle of a building. It includes design and construction information, evidence of compliance with regulations, maintenance and operational data, and details of risk management, essentially providing a complete ongoing history of the building. And finally, there is now mandatory occurrence reporting, and this requires duty holders or accountable persons to report fire and structural safety issues in high-risk buildings directly to the building safety regulator when they pose a significant risk to life. This can be at any stage of the building's construction or during occupancy of the building. These systems may lengthen the claims journey, with Gateway in particular becoming a bottleneck for remedial works. The golden thread offers insurers a valuable resource in defending claims, but also increases the compliance burden on clients. Mandatory reporting raises the likelihood of regulatory intervention, potentially escalating the cost and duration of claims. All high-risk buildings must be registered with the building safety regulator prior to occupation, so all of those three processes must be in place and fully complied with before a building is allowed to be occupied, either when it's first built or following any substantial remedial works or repairs. So what are the key changes for insurers? So the Building Safety Act doesn't just regulate construction. It ultimately transforms how insurers must assess and manage risk. And one of the most fundamental shifts is the burden of proof. So in the past, the system was highly prescriptive. Buildings and buildings owners could show that they tick boxes and regulators would generally sign them off. Now the Act requires duty holders to demonstrate that buildings are genuinely safe, which means insurers will need to review evidence, competence, and design compliance much more closely. The golden thread and gateways also have huge implications. These digital records and staged approvals introduce transparency, but may also slow down processes, extending timelines for claims resolution. And with mandatory occurrence reporting, more incidents will reach regulators' attention, increasing the likelihood that insurers get drawn into disputes, investigations, and extended claims. And although the Building Safety Act covers all buildings subject to building regulations, its core focus is on improving fire safety, particularly in residential buildings, especially high-rise ones, and ensuring the quality of the construction products used. So the bottom line is that insurers can no longer treat building safety as a secondary issue. It is central to both underwriting and claims management. So implications for claims. Claims are already becoming more complex, costly, and protracted under the Act. If we take Gateway 2, the stage where significant building works require regulatory approval before they can proceed, for claims involving remediation or reinstatement of high-risk buildings, this stage can add months, sometimes over a year, to the process. And consultants are now essential to navigate this approval process. But their fees are rising, and many are reluctant to engage in such high-risk projects. That drives up professional fees within claims and increases exposure for professional indemnity insurers covering those consultants, especially as the Act introduced several changes to the Defective Premises Act 1972. So these changes include applying the Defective Premises Act to extension or refurbishment works to existing residential properties, and extending the limitation period for breaches under the Act from the current 6 years. Now that 6 years has now changed. So for existing buildings, it's been retrospectively increased to 30 years, and for new buildings increased to 15 years. So that obviously has an enormous potential impact on PI insurers, as defects that would previously have been considered timed out could now be resurrected. Furthermore, insurers are likely to see the public authority clause triggered more frequently, as regulators may require extensive upgrades like sprinklers, compartmentation, or refuge points. These upgrades may not have been part of the original reinstatement, but must now be funded to bring building safety up to standards. And the obvious knock-on effect in a longer claims process, particularly in relation to residential properties, is an increase in the costs relating to alternative accommodation and loss of rent, which can be huge when dealing with damage to multiple residential units within a single building. So in practice, claims for high-risk buildings will take longer, cost more, and increasingly involve regulatory and professional disputes. So to bring this to life, we'll just have a look at a bit of a case study. So in July 2023, an escape of water occurred in a 116 unit high-rise block, which had previously been flagged for having unsafe cladding, but no works had actually been undertaken to that. The fire service attended the incident, with the water having set off the fire alarms, and seeing it would necessitate substantial repairs, invoked the Act and deemed the building uninhabitable on account of the unsafe cladding. So while the cladding had nothing to do with the actual claim, because there were going to be substantial repairs at the property, the historic defect had to be rectified in order for the proposed repair work to be compliant and approved. All of the residents of the entire block were forced to move out, not just those in the water affected flats. So the insured's representative prepared a Gateway 2 application for the water damage reinstatement, which also had to include the cladding reinstatement, and that took almost a year to compile. They then waited another 5 months for the BSR to make a decision. As we said, there is a bit of a bottleneck in that particular department, and ultimately the BSR rejected the application, citing that the fire strategy report was too generic and unrealistic. So insurers had to go back to the drawing board and redo their entire case. During this time, insurers had to fund the alternative accommodation for all of the displaced residents, and that was at a rough cost of £100,000 per month. And obviously that cost was going on from July 2023 for well over a year, and will have to continue throughout the course of the repairs. So this case shows that under the new regime, claims involving high-risk buildings are not just about physical reinstatement of claim-related damage anymore. They hinge on satisfying regulators, managing consultants, and supporting residents, increasing both cost and complexity. What at first might appear to be a relatively straightforward claim can very quickly escalate into a protracted and expensive incident involving defects unrelated to the actual claim damage. So I think the takeaway from that is that the Act could force insurers to undertake repairs unrelated to the insurance damage in order to satisfy the BSR that the overall fire safety of the building and defects in relation to that have also been taken into account, and they will not sign off the repairs until those additional works have been undertaken as well. So that is potentially a huge change and a huge cost impact for insurers. So in terms of strategic considerations for insurers, how should insurers respond? Well, it appears that sort of 4 key strategies emerge. So there is a need to scrutinise professional indemnity cover. Firstly, to ensure that consultants, designers and contractors are competent, and then that the insurance products they are provided with properly reflect this. The Act has expanded their liability, which means higher exposure for PI providers. And that's especially relevant in relation to these additional types of costs that we may find arising in claims, but also particularly relevant to the extended limitation periods in relation to defects of 30 years historic and 15 years proactive. Insurers need to plan for longer tail claims and increased claims exposure. So in addition to an increase in claim life cycle, the extended limitation periods, as we say, mean that insurers will need to hold reserves for far longer and anticipate the prospects of an increase in historic defect claims. And I think insurers need to support clients with maintaining the golden thread. This is a very onerous document to have to compile and keep on top of. So if they can help policyholders maintain accurate, secure digital records, it not only reduces disputes, but it can also be a useful defence tool for insurers should claims of negligence against the building owners arise. Finally, and I would say this, insurers need to collaborate with loss adjusters. Loss adjusters play a crucial role in guiding clients through the regulatory maze and managing claims costs. Close partnerships will be vital to maintain efficiency and compliance. So in other words, insurers cannot simply be passive. They must play an active role in supporting compliance and shaping how claims are handled under the Act. So a conclusion, the Building Safety Act of 2022 represents the most far-reaching shake-up in building safety in generations. And I don't think anybody could argue that it wasn't necessary from a societal point of view. For insurers, however, it is both a challenge and an opportunity. On one hand, it is highly likely to increase claim costs on high-risk buildings, stretch out timelines, and raise exposure against property and PI lines. But on the other hand, it creates a more transparent system, and one that, if managed well, could reduce uncertainty and improve safety, and thereby reduce claim frequency and severity in the long term. Success under the Act will depend on collaboration between insurers, loss adjusters, regulators, and policyholders. But it's essential that the industry embraces this new regulatory environment and doesn't try to resist it. So to wrap this up in one final concise statement, insurance is more than repairing bricks and mortar, and that's a slightly glib phrase, but it is very, very relevant to this. And it is more than that. It is about engaging with regulation. It is about supporting compliance, and it is about adapting to a culture where safety and accountability come first. And if we return to the start of this presentation, when you consider what did happen at Grenfell and the tragic loss of life, I think we can all agree that that can only be a good and positive thing. So that's the end of the presentation. I wish I'll stop run through its claims implications from the Building Safety Act. Thank you very much for taking the time to join. Hopefully you picked up something from that in relation to the subject. And finally, thank you to the Insurance Institute of Manchester for giving me the opportunity to present it. Thank you very much.
Wonderful. Thank you very much for that, Glyn. And thank you all for attending today's session. And we hope you all found that really useful. Please remember to complete the survey, and you can see what other events are coming up at the Institute by visiting the Insurance Institute Manchester website. Thank you very much.
Thank you.